considered overutilization. Even if you cross your limit by 1 rupee, it says that you have overutilized. So if you've actually used your 100% CC account, the moment your interest component is added, and it's reported to CIBIL at that moment, that is when last working day is when the reporting happens to CIBIL. At that time, as per the bureau, you've actually overutilized. Even though you may have paid that interest right on the first day of the next month.
Understood.
So this is where a lot of people miss out.
So next thing that I see, Harish, is payment regularity.
Correct.
So that is for past 36 months.
Exactly.
So for past 36 months, how the company has serviced their borrowings is what I see.
That is, so normally, just to add to that, 36 months is what is considered for your ranking.
So the track record.
The track record. As from a CIBIL's perspective, they consider your last 36 months of repayment history as a track record. And even you would normally the business cycle is also considered of 36 months. So that's the similarity here.
Got it.
So for this person, he's been repaying all his payments on time. So he's got 27 payments and everything is being paid on time. So nothing, no problem with that.
So but the delinquency is older, is it?
No. What happens is the repayments are on time, but still there are some overdues that get added. Not everything is serviced. So that's what I was talking about, where you just pay the minimal part and there is some additional thing that gets added to the loan. We'll look into it when we are looking at the loan. You'll get more clarity.
Viewers, there's something technical here. Here you see all the payments on time, but there is an accumulation of overdue.
Correct.
So this is where I think you will have to, develop this kind of insight or technicality wherein you clearly see. I think you can clearly see things. So this is the insight that Harish is going to, give us as to, how to differentiate, even though the payments are on time, but still there is an overdue.
Correct.
How the overdue is accumulated. So this is where you're gonna, help us. Derive those insights. So Harish, next thing that I see is working capital utilization.
Yes. So this working capital is normally associated with your CC and OD facilities.
Okay.
And how much have you utilized, and it's also very important how you manage, because this has a very big contribution towards your ranking. Literally, this is what is the liquidity is considered as the liquidity from the report perspective, and how you manage this is very critical. A lot of people actually falter at this on this
ODCC
OD and CC account, and clearly you can see here it's 100% utilized.
100% utilized.
Yes, 100% utilized. And what happens in a lot of scenarios, you actually overdo. You cross that CC limit by a margin, but still from because these all system generated, even the ranking is all system generated. The moment you overshoot your utilization, it has a significant impact on your ranking.
So I think during the there's a graph as well, there's a trend as well. So correct. 36 months utilization trend. As per the trend, what I see is starting from October 22nd, 22 to Jan 24, almost I think 2-3 years they have literally 100%. They have
100%. And few months
they have maxed out.
Yes, and few months they've actually crossed that, and that has actually contributed towards their ranking in a negative way.
So this depicts that the business is stressed.
Exactly. So that's why it's
money is going out, but the money is not coming in. So it's not even
correct. So normally, if you ask me, the recommended kind of the best way to manage is that you utilize 95 to 97% of your limit, because what happens, a lot of people make a mistake here. They try to keep it at 100% utilization, even though they service their CC facility right on the first day of the month. But when at the end of the month, when the interest component is added, it overshoots the number, and that is when the reporting also happens to CIBIL. So this is where a lot of people miss out, and actually it's difficult to again get that track record back on tracks, and it actually causes
this considers 36 months data,
and it's considered overutilization. Even if you cross your limit by 1 rupee, it says that you have overutilized. So if you've actually used your 100% CC account, the moment your interest component is added, and it's reported to CIBIL at that moment, that is when last working day is when the reporting happens to CIBIL. At that time, as per the bureau, you've actually overutilized. even though you may have paid that interest right on the first day of the next month.
Understood.
So this is where a lot of people miss out. So
Understood.
this is something that we actually suggest that you not cross 95 to 97% of utilization, so
Understood.
that even when the interest component gets added, that does not cross your 100% limit.
I think on top of it, to add, the collection team of the company should work hard so that the money keeps coming in, and the ODCC facility never goes beyond the 100% limit.
Not just the collections team, I would say this is something the accounts team needs to keep an eye on. They need to make sure that it's always managed correctly, because this is more of
because the money has to come in.
It's a very small mistake, right? It's a very small low hanging fruit which you can easily fix, and from a ranking perspective it has a huge negative impact. So you really don't want to because they consider this as from a utilization perspective, so it has a very big impact in terms of your ranking. We'll see that the moment when we talk about the ranking, you will clearly see what are the aspects that are contributing towards the ranking.
Understood.
And this is one of them. For this company, you will see that this is one of the reasons why their ranking is at 8.
Oh, understood. Viewers, so I think there's a clear graph in the report. So if you have a look at the graph, the utilization of this particular company is beyond 100 between October year 22 to Jan year 24. So that means the company was stressed for a longer period. So which is giving a clear indication to the banker that no further funding, there's no point further funding this company because the company is already stressed.
Correct.
If we do any sort of further funding, then the future is bleak. I mean,
Correct.
It's very difficult to get the money out.
See, what's happening here is the reality may not be as bad as it's looking here.
Understood. That is from a report perspective.
From a report perspective, it's bad.
Correct.
But the reality might be very different. Your sales might be doing extremely well, but
Correct.
you've not managed your CC facility well, and that's hampering your ranking. So these are all things that can be easily fixed and
Understood.
managed. And the only thing that you need to do is keep a close eye on this, on how it's been done. So
absolutely, viewers. I think that's extremely important, as Harish quoted. If you're doing really well, and if you're faltering in terms of managing these aspects, then you're gonna face a dead end in terms of further funding.
correct. So
Superb.
So even in this scenario, actually their sales is good, their revenue is good. It's just that it was not managed, the accounts were not managed correctly, and that is why their ranking is at 8.
Then they ended up in trouble.
Exactly. So that is what it is.
Superb.
So the next part, if you look at it, it's about the
Company
exposure.
current exposure.
Yes, current exposure. You have
By credit type.
correct. So you have 2 loans that are currently going on. One is working capital of around 36 lakhs.
Understood.
And the other one is a term loan basically. So
which is around 22.5 lakh.
correct.
Understood.
So, then you have the type of banks that are funding the business. So here you have
both the loans are from
Bank of Baroda. So you have Bank of Baroda. Then you have the bank type. So whether it's a public limited or whether it's a NBFC.
It's a
So
private
all
bank.
these are categorized. So this pretty much gives you more details in terms of the exposure that the company has.
Okay. So here the bank is public. We know that BOB or Bank of Baroda is a public bank.
Correct.
So it's a pretty straightforward information.
Correct. Then we talk about the exposure trend.
Exposure trend.
Month on month, quarter on quarter, how it's been provided. Primarily here, what is the which component is higher, whether it's the term loan or whether it's the working capital that the company is looking for.
So it has to basically reduce over a period, no? The exposure component.
Exactly. The working capital is fine. The working capital can grow because that basically means that you've been servicing your loans on time. Even it does not matter. There is no hard and fast rule that this has to be the ratio. As long as you've been servicing your loans on time, that should not be a challenge.